standard 11 we would have learned double entry system, that is using debits and credit concept. That is debit is equals to credit. But when accounts are not maintained as per double entry system, it is called incomplete double entry system or single entry system. This system is an unscientific way of bookkeeping. So for example, some transactions are recorded fully like receipts and payments of cash. But some transactions are recorded partially, as a payment made may be recorded only in the cash account and to be neglected in the payments account. And in some transactions, both debit and credit aspects are not recorded at all. The nature of this accounting principle is unscientific and an unsystematic way. Generally, this type of account maintained are cash and personal. Real and nominal accounts are not maintained in this single entry system properly. There is a lack of uniformity in recording the transactions. Single entry system do not present a true and fair view as the transactions are not recorded properly. It is suitable only to organizations which do not have any legal obligations. Single entry accounting system generally mixes up the owner's personal transaction with the business transaction. Due to maintaining accounts in single entry system, the drawbacks are there is no proper maintenance of records. It is very difficult to prepare the trial balance or the final accounts. It does not show the true profitability of business. The owner cannot ascertain the true financial position. Accountants cannot detect frauds and mistakes. It is unacceptable by the government and tax authorities for auditing purpose. Next is the difference between the double entry system and the single entry system. So the first basis of distinction is recording of the transaction. So in a double entry system, both debit and credit aspects are recorded, whereas in incomplete records, the debit and credit aspects of all transactions are not recorded completely. Secondly, the type of accounts maintained in a double entry system, it's all the three, that is personal, real and nominal, whereas in incomplete records or single entry system, it is only the personal and cash accounts are maintained, whereas real and nominal accounts are not maintained fully. Thirdly, preparation of trial balance. So preparation of trial balance is possible in a double entry system, and it is difficult to prepare a trial balance in a single entry system. Fourth point, determination of true profit or loss. So in a double entry system, true profit or loss can be determined, whereas in an incomplete records, it cannot be found out accurately. Fifth point, determination of financial position. So the true financial position can be determined in a double entry system, whereas balance sheet itself cannot be prepared in a single entry system. Therefore, the true financial position of the business cannot be determined. Sixth point is suitability. It is suitable for all types of business, whereas single entry system is suitable only for small size sole trader business. Seventh is the reliability. So double entry system is totally reliable as it is a scientific system, whereas single entry system is not reliable since it is unscientific. Next point is acceptability, where double entry system is acceptable by all users, but accounts kept under single entry system is not accepted by all users. So what we'll find in a single entry system based on the information given will be, we can find out the profit and loss, and how we'll find out this profit and loss is the difference between capital at the end and at the capital at the beginning. So also certain missing figures can be found, and finally final accounts can be prepared. The calculation of profit or loss can be ascertained by using the format of closing capital, add drawings, less additional capital, less opening capital. So the steps to be followed when the closing or opening capital is not given is by opening a statement of affairs account and then applying the format of statement of profit or loss. Statement of affairs. So what is the statement of affairs? It is a statement showing the balances of assets and liabilities as on a particular date. So it is exactly the same as balance sheet, but why statement of affairs is prepared is to find the capital of the business, which is using incomplete records. Though it is like a balance sheet, but it is not to be called as a balance sheet. So let's see the difference between statement of affairs and balance sheet. First point is the objective. So the objective of preparing a statement of affairs is to find out the capital of the business, whereas the objective of finding out the balance sheet is the financial position of the business. Secondly is the accounting system. So it is prepared when single entry system or incomplete double entry system is followed, whereas balance sheet is prepared when the accounts are maintained under double entry system. Thirdly, the basis of preparation. So it is not fully based on ledger balances. Some items are taken from source documents also, whereas balance sheet is prepared exclusively on the basis of ledger balances. Fourth point is reliability. So statement of affairs is not reliable as it is based on incomplete records, whereas balance sheet is reliable as it is prepared on double entry system. Last point is the missing items. It is difficult to trace out the items omitted, whereas it is easy to trace out the items omitted. Preparing the final accounts becomes very difficult because of the incomplete information available. So certain informations like purchase, sales may not be available. Therefore, we must prepare a separate account like the total debtors account, bills receivable account, total creditors account, bills payable account. So after compiling all the missing information only, the final accounts can be prepared in an incomplete double entry system or so called as single entry system.